SoFi has their Q3 earnings coming up in just a few days on Monday before the bell. And in this video, I'm going to share all of my Q3 earnings predictions for SoFi going into the following week. Now, the stock closed, I think, barely up, but definitely down for the week. It's back into the $6 range. So really, this earnings is going to be an interesting one to see how the stock reacts, given everything that we've seen from fintech in general and the macro. I am not recording from my usual studio. I literally just landed in Vegas. I am going to be recording a couple of videos here, but not too much content. But obviously, I had to share some of my Q3 earnings estimates with you. First and foremost, I think revenue, just following that trend of being sequentially lower every subsequent quarter, I think it's going to be around 34% up or 561 million. That's my estimate, maybe a little bit higher than some others. For adjusted EBITDA, I think the 16% margin stays the same as the previous two quarters. That's pretty stable. I pegged them at 80 million in adjusted EBITDA. However, it's important to note on the profitability point, as of Q2, sales and marketing spend was about 37% of SoFi's revenue, its largest expense by far. Now, this is something that SoFi can bring down quite a bit, right? It was 182 million in Q2. I think that sales and marketing is going to start to fall quite a bit as we head into Q4 and profitability becomes a main driver. They might also have a high sales and marketing spend for Q3, like this quarter when they report on Monday, as some of their segments have a very quick turnaround from the moment that a new member joins in Q3 to positively contributing to the financials in Q4. So there could be a turnaround time to say, well, if a member signs up in September or October, they can have a positive financial contribution to SoFi for Q4, right? So sales and marketing spend might not fall as much as we think it would fall. Definitely not as much as I think it would fall for Q4, but I do think that it is going to be lower than Q2, especially as we've been seeing more and more organic growth, potentially more referrals, everything that's been coming on from the SoFi Stadium, the concerts that we've been seeing, and the flywheel in general. As that scales more, SoFi can lower some of that sales and marketing spend because essentially they're already hitting their members' targets. Okay, so in terms of members, speaking of members, 584,000 in Q2 was the addition. Around a 40% year over year growth would be around 400,000 additions. 450,000 is around 44 to 45% year over year growth. Personally, I think that Q2 was more of an outlier considering that SoFi needs to start aiming for that profitability. I know I said this in the last quarter as well, and they blew all expectations out of the water. I think some of the outlying factors for Q3 are the Taylor Swift and Beyonce concerts and the other performances at SoFi Stadium. I think Ed Sheeran was one of them. Also the start of the Super Bowl. All of this can definitely boost member numbers higher. My estimate is around the 485 to 525 range on the SoFi Weekly podcast. I came in at something like 495. So that's members. Now, in terms of products, as we pivot over, I definitely think that they're crossing 10 million products for sure this quarter. I think they're in 9.4 million right now. 10.2 is my guess, which is around 800,000, product additions. I want to see more product growth year over year than member growth, which signifies this flywheel ramp, right? As of Q2, financial services products to lending products, that ratio was about 5.3x. I expect this to have increased 5.5x. 5.6x, even higher than that. Even, Anthony Noto in the Q2 earnings call was saying that they hit an inflection point in the productivity loop. I think members to products is something like 1.5, one member to 1.5 products. I want to see that increase as well because it signifies this flywheel ramp. And as we've talked about numerous times, that flywheel is really the value proposition for SoFi. From a lending perspective, I still think personal loans are going to carry the majority of the weight. Student loans is where the interesting discussion happens. I don't expect the ramp to be that aggressive from the start for student loans. Remember that payback period has only started in October, and there's a 1-year grace period on that repayment. I don't think people are going to be rushing to refinance so soon. We should see a heavier ramp into Q4, but not as early as Q3. I do want to see management talking about this on the earnings call to address this ramp. In terms of originations, I estimated something around 750, which is almost a double off of their 395 that SoFi reported in Q2. Now, even if you take like the 500,000 number in Q1, I think it was 520 or something like that, and then you take the 395 number in Q2 in terms of new originations for student loans, and you break that out monthly, divide that by 3, basically, it's around 160 to 130, million originations per month. October was the only month that student loans started. And so even if we 2x that number, it's around 600 originations. And I'm going a little bit higher to say around 750. Now, remember, in 2021, when Biden basically did a pump fake, when he said, hey, the moratorium is ending, and the moratorium in fact didn't end, there was a huge rush to refinance. And that rush to refinance could be more solidified now that it's actually coming back. It could blow a lot of these logical estimations out of the water. It can come in much, much higher. But remember that the rush to refinancing that we saw in 2021 for student loans, which basically took student loans from $1 billion to $1.4 billion, was number one, in a much different rate environment. Rates were near zero when that happened. Number two, right now we have this 1 year grace period, which basically removes all the negative repercussions of not paying, right? So I do think student loans is going to be tapered somewhat. Still, 750 will be almost a double off of what they came off of in Q2. So I do think that in Q4, though, they're going to be ramping up that quite significantly. In terms of deposit growth, between 2 to 3 billion was my high level estimate. I don't think much higher than 3 billion, just given where the macro is. But the FFIEC numbers should give us a good indication of the deposit growth for SoFi Bank. SoFi is still raising their APY 4.6 as of last week. Obviously, that's not going to be affecting the Q3 numbers. It's going to be in Q4. But the point still stands that they are offering the best rates out there. Last quarter, the deposits came in at 2.7 billion. I think they're definitely crossing 15 billion in deposits, which would represent a 2.3 billion addition. I don't know how much more than that. I do think that 15 billion deposits are going to get crossed. Finally, just wrapping this video up on the tech platform, I think we're going to see a really positive lift in the tech platform, just given the sheer number of products that Galileo has consistently been releasing and executing on over this past quarter. Management has primed investors on every single earnings call that at the end of the year, both on an aggregate number of accounts as well as the margins of the tech platform will be rising, especially after the loss of Current, which was the second biggest account that SoFi had, which ended up hurting that trend line in terms of the Galileo account growth. I also think that a lot of the pilot programs which are testing out Galileo's program are going to start to come to an end. They're going to start to wrap up, and those legacy institutions, those large players are going to start to make a decision whether they want to migrate onto Galileo or not. This is closer to a Q4 prediction than a Q3 one, but I hope management does talk about it, right? These pilot programs are usually 1 year programs, so around 12 to 15 months, maybe 18 months to fully transition. So that's why I say it's a Q4 initiative, but I want to see if management is hinting at this, or if they flat out say that, hey, we validated some pilot programs and now we're working with some of these legacy players, because that ensures a steady growth of accounts onto Galileo. The other thing that I'll be looking at on the call with regards to the tech platform will be an update on management's strategy to go after bigger deals, right? Bigger deals had a longer lead time, but bigger deals were more secure. They didn't switch as often, and that really came as a result of them losing Current. And I want to see what those initial results are yielding for SoFi. At a high level, those are my estimates for Q3. I tried to cover a lot of the different aspects of the business. I will be covering the earnings live on my channel, on Tanner's channel as well. We're both multi-streaming it, so definitely tune in for that. If you want to catch us talking about the earnings live, it's going to be really early here. I think it's like 4 a.m. my time for the earnings, but I will wake up or maybe not have gone to sleep and definitely catch the earnings. For right now, this is the Fundamentals Investing Podcast. Thank you so much for listening.